All right, so welcome in today. We're going to dive into blockchain for business and what that might mean to businesses around the world, but also maybe to you and how you're going to be doing your own financial instruments in the future. My name is Paul Barron. Welcome back to TechPath. As you guys know, we jump into all things blockchain, kind of that cutting edge technology. We get into AI, autonomy, and all that good stuff. Today, we've got a gentleman by the name of Michael Jackson coming over from Concordium. Michael, welcome back to the show, or I should say welcome to the show. We've tried to get you on many times, so I feel like we know you.
Thank you, Paul. Pleasure to be here. Well, I'm great. It's a pleasure to be here. Thank you very much, finally.
Excellent. Well, it's good. I mean, the good thing is that you've got so much going on that you're a difficult interview to catch. So we feel very, very grateful that we were able to get a hold of you. Let's get into Concordium and a little bit about what you guys are doing, because really your innovation is quite unique and different than what many people have seen in the blockchain development ecosystem in some time. Talk to me a little about where you guys are going and what is Concordium?
Yeah, what is Concordium? Well, I think where we come from is one of the most interesting points here. Most of the people behind Concordium are older people from the financial system who looked at what Bitcoin was doing, what Ethereum was doing back in 1718, and thought that this was unsustainable. It was unsustainable not because of the technology behind the blockchain, but because it was unsustainable in the world of the financial system we know today.
Right.
And for all that we like and we want an open financial system where everybody can do what they want with no supervision and no nothing, it's kind of not the way things work. So the team behind Concordium began to think about what's needed here. What do we need in a new blockchain, a new layer one blockchain? And 5 years on, the world doesn't really need a new layer one blockchain. We've got a load of them, right? You'd think there should be enough of them by now. You've spoken to a load. But what we bring to the equation here is identity. And identity is a tremendously strong concept. It really drives the way we trust each other in everyday life and when we transact over the internet. So by bringing identity into the blockchain, we think we have a genuine innovation here. And we bring that identity in at layer one at the blockchain level itself, within the wallet and within some zero knowledge proof concepts. We can talk about those a little bit later. Of course, people's identity isn't exposed on the blockchain in clear text or even in encrypted text. That wouldn't be much good. But so we've brought identity into the system. It works in the financial system. It can work with people, but it can also work with some other entities, virtual entities, devices, contracts, programs, and things like that. We can maybe talk about that a bit later.
So, Michael, we've seen and we've had a chance to talk to a ton of DeFi companies, experts in the space, kind of the evolution of where DeFi is moving in general. And I think for our audience, many people who are both in the financial system as it is and lives today kind of have maybe 1 foot in crypto and 1 foot in traditional. And you see more and more people, especially in the early adopter phase of where the financial shift is occurring. When you look at that, you mentioned identity, trust, that whole ecosystem, because that's essentially what we're coming over from traditional finance today, whether you're dealing with a bank or a trading house or whatever it might be, or an ETF organization, et cetera, the traditional instruments that are utilized out there. How long before you think we'll see that kind of equivalence in blockchain and the opportunity for moving into DeFi and investment strategies around that?
I think it's going to come quite quickly. Normally these things we say take a long time, but I think we've got a couple of stimuli coming along. One of them, just very, very recently indeed, there were new regulations or new guidelines have been produced by the FATF, the Financial Task Force, and they're tasked with eliminating financial crime. They're on anti-money laundering, terrorist financing. And I think we all agree that that's basically a good thing in reality for many of us. We live in a society where we don't like that sort of thing going on. And they're now forcing countries to adopt measures which are going to protect citizens from these things. And de facto, they're going to roll into some of the crypto transfers, cryptocurrency situations we're in today.
Right.
And they're important for countries because if you get on one of these gray lists or blacklists, then it's not just the crypto that breaks, it's your whole country that breaks. Your businesses won't be able to transact. And many countries have spent many years trying to get off these grey lists and blacklists, and they don't want to go back onto it anytime soon. So this is going to be a catalyst for bringing this forward, probably within the next couple of years.
So good shifts there. Obviously, we've seen what's happened in El Salvador. A good example of that is what they have had to deal with from the central banking system in that kind of a little bit of a friction scenario that they're dealing with. Obviously, being one of the first guys through the wall, it's an old adage, someone's going to get bloody if you are leading the pack in that kind of scenario. When you look at both governance or especially around countries moving into real structured DeFi, or at least into a framework that businesses can start to really engage in this. Even though here in the United States, I would say we're one of the most advanced blockchain countries out there in terms of people understanding it and probably moving securities and their own treasuries into blockchain of all types. Do you feel like we're going to need that major leap forward in regulation before we see this become essentially just a complete takeover of the current financial system?
Yeah, but I think we're going to have to see that, because the two systems have to somehow interrelate with each other. Already today, one of the big challenges of people in crypto is if they start to interact with the existing banking system, the existing banking system is starting to ask questions. I think we all know many people within the crypto space who've had bank accounts refused, who've had issues with that, not just with themselves, but also with companies. Right. Mm-hmm. I know for a fact that, when we start companies in the crypto space, even getting a normal trading bank account to pay salaries or to pay the rent or something is really quite difficult, because the banks are terribly risk averse around that. I mean, when I look, for example, at the recommendations in the countries that I would work in, the Baltics, in Europe here, three of the largest risks that are seen by the banking system, they call them crypto. They don't really know. It's a word. It means many things to many people. But when it's on the list, they're going to have to be super careful. So they're going to sort of split themselves away from that, which isn't great, right? And the only way we're going to get the two systems to work at all is by having the regulators be somehow comfortable with, the cryptocurrency system or the blockchain systems in general.
Yeah, we've had a chance to talk to a few banks that have started this process here in the U.S. and have been somewhat successful in at least bridging that. What are some of the benefits you see of the traditional finance system as it is today, making that bridge to a DeFi architecture, kind of really operating in both sides of the plate? Because we're going to see, most likely within the next 2 to 3 years, massive activity in retail banking. How do you see them making that transition?
I think retail banking is pretty much the same products today as it's had for the last, 100 years or something like that. The savings products that are offered to consumers, the lending products they can buy, and the deposits they can get, and the access to the instruments they can buy have been very limited. They haven't really changed over the last period. Obviously, if you're in the professional financial world and you're into high-speed trading, high-frequency trading, and all of these things have been developing really fast. But for the normal man on the street, there hasn't changed a lot around that. But I liken it to when we were dealing. My background is from Skype. I was one of the early guys in Skype, and if you remember back then, in 2002, if we go back basically 20 years, it was the first product that allowed normal people to speak across the world without an intermediary. Right. And that's hugely powerful. I mean, you think, well, we wouldn't be having this conversation today in this format now if those products hadn't existed back then. And Skype was one of them, and there are various others, and other people have developed since. And I see a similar trajectory down the financial system. Is you've got base products which have been created now by people at the edge of regulation, and Skype was also at the edge of regulation back then. You had to have a license to have a telephone company, for example. In some countries, it's still illegal. In Dubai and the United Arab Emirates, Skype is still forbidden, and so on. And I think we're going to see that journey. That's 20 years ago, right? We're going to see the same journey in the financial system, where we're going to see products offered to normal people in the street, which, according to the system, they can't understand, or they can't use, or they're too complicated, or they're too stupid, or whatever. But the reality is they're not. People will figure this stuff out. So where the new financial system comes is we bring the speed of development, which we're seeing in the crypto world, which is incredible now, into product development for normal retail people. And I think in my world, what I see is that the amount of brain power which has been applied into this sector today, 24/7. It's not 8 to 5 in a bank with a few developers in the product development department, 3 people, with hundreds of thousands of people banging away in a fairly open environment, clever people with lots of tools at their disposal. And some stuff's got to come out of it. It just has to. You can't not
Yeah.
with this brain power.
So I think it's a perfect example. You're right in terms of that transition, and we've talked about it here on this show quite a bit. Is the evolution of what happened in the era of the internet explosion, much like what BlockFi, but just exit times 10. And maybe you can even get a framework of where this is really going to go. Very early stage, though. Let's talk about decentralized, regulated, decentralized versus what we see today in decentralized, which you have a lot of companies in the blockchain space that pride themselves as a decentralized organization, a DAO, autonomous organization, all the way down into companies that literally don't have infrastructure, don't have offices, don't have HQs, all those kinds of things. Do you feel like the world is ready for that kind of decentralization when it comes to the financial system?
I think it's an inevitability in the thing. We've seen how quickly it's grown. So the world kind of has to get a little bit ready for it. So I think we can help ourselves in the sector by coming up with frameworks, working with the interested parties to produce the frameworks and to link into the systems they know already. We need tools to do that. I mean, if we look at in a traditional bank, I sit in a traditional bank, we have anti-money laundering systems, of course, we have big transaction analysis machinery running, you can call it. And on the blockchain, we have Chainalysis, we have Elliptic, and all of these guys doing analysis of what's going on. So instead of operating within the institution themselves, people are building businesses up that are actually doing this monitoring and control. And arguably, they're going to be better at it because it's their job. They're making money out of it. They haven't existed. Whereas for the bank, it's just a cost. So you're kind of going to be doing, I won't say the minimum necessary, but certainly no more than necessary, and it's seen as a pain rather than as a commercial advantage. And I think the whole blockchain, the whole public system we get around of having a public permissionless financial system means that people can plug into it all over the place and develop product that are going to be needed to make regulators happy. But we don't quite know what they are just yet. But this is going to be the journey over the next couple of years for people to do that.
Yeah. Okay, so Michael, when you look at the ecosystem that's out there right now, we have a few companies, I should say maybe a handful, maybe less than 10 right now, at least that we track, that are essentially kind of supplanting what the banking system has been doing over the past 5 decades, essentially allowing for loan, creating all sorts of yield products, staking tools, et cetera. All of this is happening today at what seems to be a very fast clip, and the growth rate of some of these companies absolutely staggering. Do you feel like those kinds of companies have a potential leading edge or first market mover position? Or do you think someone like a JP Morgan or a Bank of America or beyond, if you get into some of the European banks, that they can just jump into this and really kind of match stride with where some of these new blockchain, alternative finance companies are going?
I'm a big believer in the first model, the alternative finance structure. I look back on the telco system. I mean, everybody's saying AT&T should be doing this stuff, and AT&T never did this stuff, right? AT&T are really good at providing rails. They dig the road up and they provide fiber to your house and all of that stuff, and they're real good at that. What they're very bad at is providing customer-friendly product on top of it in an open world. They don't like it. They're used to running as a monopoly. And I think the newer companies are going to be more agile, come from that point of view, come from the internet point of view, where user experience is so much more important. It's key to being successful. And I think that's likely what's going to happen. I mean, if we look at where the larger companies are on, even within the wallet infrastructure, with the existing cryptocurrency trading infrastructure, I mean, Coinbase has been around since the year dot, Kraken's been around from the year dot, blockchain.com's been around from the year dot. All of these people are the ones with the volume today, Binance even, and they're not the existing organizations. They're people who build a new organization, a new way of working around the new technology or the new products. And we haven't seen anything really coming from the existing organizations. And if they were destined to do that, we'd be beginning to see it now,
Right. Yeah.
I believe.
I feel like I'm, at least in talking with a lot of the CEOs that are actually doing these things and coming up with, and it seems like they're constantly trying to best themselves in terms of better services, faster services, more brand, more breadth in their products and services that they're offering, which is really kind of opening up. Maybe they're getting ready for, traditional mainstream as that starts to adopt, because I think we will see, just that on-ramp of massive retail consumers moving into this space in the coming years. So I would agree with you in the sense that I think it is going to be the more innovative. I want to talk to you companies about that, but I want to talk to you about Regulated DeFi Lab. What is that? You guys are doing something within that space under Concordium. How does that work?
Yeah, how does that work? Well, as I said before, one of the key elements of Concordium is our ID constructs we have. And that ID is about the people who are using the network. You can get an ID, keep it self-sovereign identity. It's not known to the network. It's not known to Concordium, but you go ahead and get it. And that's a fairly well-known concept. It's not very well used by people, self-sovereign identity, right, but it exists. Where we see it as being interesting is if you imagine you have a smart contract, a lending protocol, a lending contract, or something like that, an automatic market maker, whatever, that's running. Could you imagine that getting that certified? You get that audited. You do it today. If you're producing that thing, you can get it certified. You can prove the functionality of that. And once that's certified, it can get an identity. And that identity is definite. The certification characteristics are definite around that. You could specify the type of the contract, the name of the contract, who certified it, when they certified it, up to what level it was certified. And that, I think, is one of the premises for having regulated product in the market.
Right.
Because that's what regulators look for now in the existing market. They're looking for the organization behind it. They're looking for, does it work properly? Do you have the checks and balances in your operations to do that? And what they're looking for is within those checks and balances, are people doing their job properly? They come in and audit things all the time, as you know. One thing software is really, really good at is doing the same thing over and over again and not making mistakes. People are really, really bad at it. And when we look at the audit failures and the fines and things that banks have been getting, it's because people are lazy, they shortcut the processes. We all do. It's human nature to do that. And software is really good at it. So we believe we can produce software that's better than the banks, that's better than the products that they have. And we believe that's the way to the future of the decentralized finance, or a different form of financial product, whether that's right, decentralized all the way or semi-centralized or whatever. I don't know. And what we want to explore within our DeFi lab is how you can build up a new financial system with those constructs and that concept in mind.
Interesting idea. I like the idea side of it in terms of IDs being utilized within blockchain today. Most of that, when you look at verification, the node network, the ability to utilize the network itself to essentially kind of secure a transaction across, get it verified across multiples. Everybody agrees that that's the transaction. That's kind of been the blockchain model of the past, and still today, the pretty much leading the technology. What you're talking about is shifting that potentially to an ID structure that would give a blockchain element an ID. Would you need the node infrastructure in place, or would the IDs be able to just handshake into other transactors in the network itself without the requirement for thousands of nodes or hundreds of nodes being active on the network?
Well, the nodes are there to protect the integrity of the network and to make sure that the components of it, which is the accounts or the transactions or whatever, haven't been tampered with in any way going forward or into the past. I think that's just as valid when you look at a smart contract, for example. We need to be sure that that hasn't been tampered with as well to go through. So yes, the validation system is absolutely necessary in all of this still. And I think it goes to the ethos of the blockchain, the idea of independent validators ensuring the integrity of the network. It's the network itself, it's the transactions, but it's also the contracts and whatever other component comes into that.
How do you see, Michael, how do you see the financial system lining up? lining up in, say, the next 5 to 10 years? If you look at what we have today, it's still pretty much on islands. You've got the traditional banking, you've got central bank, the Fed here in the United States. Obviously, you've got the SEC and what they're trying to do. The infrastructure's pretty much been set, but then you plug in this whole new, what is soon to be a $3 trillion market, possibly going to see a $4 or $5 trillion valuation in the next couple of years. That's getting some attention because now you're getting up to half the value of gold as a potential market. How does that shake out, and what do you think is going to happen with things like central banks, regular, retail and/or regional style banking systems in the future?
I think they're going to have to embrace it at the product level. I think so. I think existing banking continues to have a good role. Obviously, as a wholesale banking model, is ensuring people's savings are protected, their fiat savings are protected. I can't imagine that in the next 5 years, everybody's going to have all of their savings and financial wealth in a cryptocurrency. We can discuss how the central bank currencies begin to play into that, but I think that's a super long way off, much further off than people think.
Yeah.
But I think an interesting thing about having these islands that you talk about is that, as you said, the island is getting larger. The island's getting huge in crypto. It's too big to ignore suddenly. And things are happening, and normal people in the street and regulators are maybe in their work life living in isolation, but certainly in their home life they're not. And I'm sure if you're a financial regulator and you go to a cocktail party, there's going to be 10 people asking you about this stuff.
Oh, yeah.
Just to find out, just curious. Even when you're at home, your children are probably messing with it or whatever. So you're going to have to figure it out. You're going to have some sort of answer. You can't just put your head into the thing. And what's happening is, as the banking system is closing off this thing, it's actually getting more impetus in itself, because all of the functionality that's needed is needing to be developed within that existing system. So, we've seen an entire custodian infrastructure come out around cryptocurrency, whereas there was a perfectly functional custodial system around the existing stocks and shares and other assets. One of the last 10 years I've been working in venture capital, and we need to use custodians to look after the shares and the assets of the companies that we invest in. When I went to those custodians 5-10 years ago and said we want to have tokens, they had no concept of doing that. They didn't know how to do it. They didn't want to do it, whatever. The effect of that is there are now token custodians all over the world. In most jurisdictions, there are token custodians. There's a whole new industry built up because It filled the vacuum. And money doesn't like vacuum. Money tends to fill into vacuums. It's what's happened through life. And so there's been created this entire financial infrastructure by the side of it. And I think that's actually perversely been good. Even though it's a bit odd, it's grown faster.
Now we've seen Europe actually move a little bit more aggressively toward crypto in general. Here in the United States, we're getting indicators now that potentially stablecoin regulation is going to come into play. A lot of people are looking at that for just the aspect of whether you're looking at USDC or Tether, models like that. When you look at stablecoins and the potential eventual evolvement of digital currency, especially at the central bank level, and what we're seeing over in China with the digital yuan, how do you see all these things start to play together? Do you feel like something's going to shake out of this, or do you think central banks will eventually just create digital dollars and sovereign nations will abide by that? We'll see maybe a new world reserve currency arise from this. What are your thoughts on how that side of the industry is going to roll?
I think we've seen a couple of things. Just yesterday, the European Central Bank announced their advisory board for their stablecoin project, which is they've been applying for people. It's an interesting group of people they've got involved with it, and you might argue whether they're the right people to be looking at it, but whatever, they're intelligent people, and I'm sure they'll do a decent job over time. So they're certainly addressing it. They're seeing the digital euro, the currency of Europe, as being something they want to work with, they want to understand. And they created this because of, again, an outside pressure. They created it because of Libra. They were suddenly scared that Facebook, with the reach of Facebook or Meta, or whatever we call it now, of Facebook, their reach into everyday life was suddenly important. Instead of a load of nerds messing around in their bedroom, this was this could be super important. They did that, and they're beginning to embrace it, and they're looking into how they can do it, how they can make it work. China's doing that, and I was in an interesting discussion. I'm not in the US, so I see it from afar, but the US seems to be taking this a little bit resistance against stablecoin, and I read an interesting concept, which was that in fact the dollar has for a long time been the symbol of power of the United States. It represented soft power throughout the globe, and they've lost that a little bit now because it's not the same status as it was, and the US military is not as strong as it used to be, and you can see that from challenges in different countries. And oddly enough, for me, it seems like a very good thing for the US to adopt a US dollar stablecoin of some sort, which could, reimpose that soft power again. And it'd be interesting to see if the sort of the state begin to take that up. The federal level, they begin to think of it as a serious policy instrument any longer. Now, that's not the same as the stablecoin we're using in crypto to trade and hedge and put our money into things. But that I think regulation around stablecoin is, oddly enough, relatively straightforward. You're issuing a currency which is backed by something, and the something that it's backed by has to be there. It's kind of fairly logical. And checking that it's there is also relatively straightforward. It seems, we know that Tether have had their challenges proving whether it's there or not, and there's still speculation as to whether it really is there or not. But it's not a big job, really, if somebody actually wanted to do that. So I think finding stable coins and making them work is going to be fine. And the bedrock of crypto, whether you can make money on a stable coin is, of course, Tether's problem, because if all the money is just locked in a bank account at a negative interest rate, how the heck do you make money out of it? Which is the next thing, which is a different question, perhaps.
Yeah, which is where potentially, central banks could start to really roll into this. And obviously countries really do what, China has done, which in terms of just developing a digital yuan and creating that currency and trying to at least get back into the position of a world reserve, because I think that's going to be the scenario as we play this out. Because you're right, the dollar devaluation has already started to occur dramatically across the globe. We've already seen a certain amount of inflation that's hit us here with, impact on what the valuation is going to be. Could we see something else, evolve out of this? And there's many analysts out there and market makers that have been looking at this for quite some time. So it's going to be interesting to see how these things play. Last question for you, Michael, and that is, when you guys are building in this ecosystem right now on an ongoing basis, day in, day out, obviously we've seen from a lot of project leads, everything from developer challenges to infrastructure challenges to, the partnership side of things and just awareness, general awareness. What are some of the things that you feel are going to be the hurdles Concordium has to overcome to really accelerate in the next, say, 18 months?
I mean, the biggest challenge is identity, right? The whole ethos of crypto has been, has been this sort of pseudo anonymity you've had in the crypto. Nobody really knows who you are or what you're doing, and you can't see what's happening. I think that's probably the largest cultural change that needs to occur, is that people need to understand, or a group of people at least need to understand, that to move the dialogue forward to the next level, then we need to accept that things are going to be slightly supervised, that we're not going to have a free-for-all. There's going to be an element of friction in the system as stuff needs, for the sake of approval, or whatever. I think that level is going to be a challenge. That's why it's going to take a couple of years. But I had an interesting conversation just in fact earlier today from a DeFi protocol who I know very well. Some friends of mine are building it, touched by the new regulations that are coming through. They're feeling a bit nervous about some of this stuff. And the perverse thing is that we're coming from the regulated side, the authoritative side, something which is a bit against the ethos of crypto. They're coming from the other side. When we list the challenges up, they're actually the same challenges. The tasks that need to be done are the same. So I think I'd like to encourage a few people to jump the fence and to take their technical developments, their product developments, the way you can do these extraordinary, elegant new products, and bring them over into a world where we can supply some of the base infrastructure, the sort of legal support, which, why do you know about that? The regulatory support, the knowledge of the system, and help to bring those projects into an acceptable level, so that they're not going to have to conduct them under an anonymous name and hide their handles and all of this kind of thing. I'd love that to be successful, and I think that if we get these things over the hurdle, over the fence here, within 6-9 months, we can have something really going, which is going to work properly.
Well, it's going to be interesting to watch for sure, because I think the two trains are on the same track now. I would say in 2017, Bitcoin and just in general cryptocurrency was barely on the track. Now it's definitely barreling toward each other. So there's going to have to be some sort of give and take, I think, within the ecosystem, especially if we move across and really bridge the gap, both for traditional crypto as it is today, bridging to traditional finance, and traditional finance getting into the DeFi side of things, where the masses will start to adopt it, which is going to be the key for that to occur. So, Michael Jackson, great having you on here from Concordium. Again, thanks again for stopping in. We appreciate it.
Thank you, Paul. Pleasure to be here.
Excellent. All right, so you guys are tuned in over on the podcast right now. Make sure and give us some likes over there. We love all your feedback over on Spotify. Great stuff. Thank you so much. If you want to make sure and catch all of the late breaking interviews and a lot of our charting, our analysis, and many of our other guests, the best way to do that is over here on YouTube. Just search Paul Barron Network. You'll find us. And the best thing there is you got to jump into the Diamond Circle. It's the way we drop both rewards and also additional education and insights back to our community. So make sure to just do that. Hit the link below. If you want to reach me out on Twitter, it's just @Paul Barron. We'll catch you next time right here on TechPath.